The Dow was up over 1,200 points on Thursday. Does that mean that the stock market crash is over? I will answer that question and show you some of the sectors of the market that are leading the way. Plus, I'll do my regular weekly market analysis and we'll look at the day trade of the week on AMC. Well, we had some very good gains for the stock market last week, motivated by a good CPI number. The inflation was less than expected. The market really liked that and pushed stocks higher, pushed interest rates lower as concerns about inflation come down and perhaps expectations that the Fed will make even more interest rate raises starting to come back a little bit. So we'll look at some charts and we'll discuss how this all plays out. What's important to understand though is the stock market crash over? Have we made the pattern that I call the crash reversal pattern? Has it stuck? Well, let's take a look at some charts and try to answer that question. So we're going to jump into a chart of the NASDAQ 100. Now, for those who are new here, the crash reversal pattern has 3 steps. It has a break of a downward trend line, the build of a rising bottom, and then the break up from a rising bottom. And so we had that this week, Thursday and Friday, for the NASDAQ 100. This is the chart here. QQQ have done that. I could also draw the downward trend line like this. We're breaking the downward trend line from a rising bottom. This bottom is higher than this bottom. All right, so that's a sign that the buyers are taking control. Before you get too excited though, realize that this is just the daily chart. And I could show you this same pattern on the intraday chart. But what's critical if you are a longer term investor and thinking about where the market is going in the months ahead, we have to look at the weekly chart. So let's do that now on the NASDAQ 100. To do that on Stockscores, I just go to the 3Y here, punch that. And there we can see that the downward trend line for the NASDAQ is still intact. And so although we've got a positive picture in the short term, on the daily chart, on the hourly chart, we do not yet have that positive picture for the NASDAQ. Now the NASDAQ is predominantly tech stocks, stocks that went up a whole lot during the rally after COVID and came down a whole lot since then. I don't see the longer term bottoming pattern on the NASDAQ, but that's not the only chart we're going to look at. Let's jump over to the Dow, which represents the very large cap stocks. Now here, if I go to the 3-year, you can see that the downward trend line has been broken. So that's a positive. The only issue is it doesn't come from a rising bottom. It's coming off of the lows. And so that means that there's a good chance it will pull back before it tries to move back towards its all-time highs. So the large cap stocks look better than the NASDAQ, but not necessarily great yet. There are, however, some sectors of the market that are leading the way, and I think areas where you can look for opportunity. For example, I've talked in recent weeks about cruise lines, about airlines, and they've done really well since we started to see that strength coming in. Well, another sector that I want you to keep an eye on is the cannabis sector, because it has started to do well, probably benefiting from the fact that the Democrats have held a lot of the House seats that they were expected to lose. And of course, there's this optimism that the Biden administration will legalize cannabis, and you've seen these charts start to move up. So here's a chart of CGC. This is the daily chart, and what we're going to do here is just notice that there's bottoms rising. We've broken this little downward trend line. This longer term downward trend line was broken back there. So we're slowly working our way through this bottoming pattern on cannabis stocks. It's pretty volatile, and that tells me that there could be lots of volatility going forward as well. So I would, my sort of concept for how to trade this is buy pullbacks, buy the breaks of pullbacks. Don't chase it right here, because I do think it's going to take a little bit of time to gather momentum. There's a fair amount of risk in there. It's not for everyone. All right, how about the energy sector? It has been doing well lately. Let's take a look at that chart. And again, we're going to jump to the 3-year weekly chart. And if we use this concept of upward trend lines providing support, for those of you that watch my videos every week, you'll remember that back when the oil chart was hitting that upward trend line, I said watch for a bounce off of that trend line. Well, we've had that. And I think a lot of people are thinking, oh, it's time to buy oil stocks. Well, actually, that was 6 weeks ago. Because the problem now is we're coming into the all-time highs for that sector where it's likely we'll get stuck. And so I like the energy sector looking out months, but maybe looking out days or weeks, you might be able to get these things on sale if they pull back a little bit. All right, well, what about the biotech sector? I can tell you that there's some better looking charts in the small cap stocks, and the biotech sector is one area where we can look for opportunities. So I pulled up LABU, which is the leverage ETF, but I'm actually going to use the unleveraged ETF for biotech. We're going to go 3-year weekly on this one as well. And notice what the pattern is here. Downward trend line. Step 1, we broke the downward trend line. Step 2, we built the rising bottom. And step 3, we're starting to move up from that rising bottom. We're still below this resistance zone. Wouldn't surprise me if we just pause a little bit here, but this is a sector that may lead. And that helps the small cap stocks. If we go to IWM, which is the ETF for the small cap sector, you can see that it broke its weekly downward trend line. It then made a double bottom and is starting to move up again. And I've noticed some strength coming into those lower price stocks. Many retail traders like to play those. Retail traders have really been beat up this year. And when you think about what's happened with Bitcoin, that's another area where retail has really been pummeled. But we're starting to see maybe the sellers are exhausted. People have had their panic sell-offs. And now you're starting to see some buyers come in. So I think there's opportunities in the market. I wouldn't get too energetic just yet, but there's reasons to start picking away at some sectors of the market and be a little more optimistic than we have been. All right, let's get into my regular weekly analysis because we're going to look at some other charts where we can look for this crash reversal pattern. So let's start with the S&P, and we're going to put all of these charts together. They all are interrelated. So here's the S&P chart, and we're going to start with the 3-year weekly chart. And there you can see the downward trend line, much like the NASDAQ, is in place, and we don't have the rising bottom. So those large cap US stocks outside of the Dow 30 are not quite there yet. Now remember, the Dow 30 has a couple of big oil companies in there, and that can maybe help it lift above what, say, the S&P 500 is doing, because of course the oil stocks have been doing quite well. All right, well, what about the short-term chart of the S&P? You know, if you're a short-term trader, a day trader, a swing trader, you can see that the buyers are in control because we have rising bottoms. And so for that short-term trader, it's a very different picture. There's opportunity, day trading, swing trading. I've really seen a pickup in swing trading in the last week or two, whereas it was not great for a while. Day trading is always able to produce some good trades because there's always something going on, but now we're starting to see those swing trades as well. Let's take a look at the Canadian market. T.XIU is the symbol for the TSX 60. We'll start with the short-term chart. There's the 1-month, 2-hour chart. It's heading higher, so that's a bullish chart. But when we look at the 3-year time frame, we can see the downward trend line has been broken. And again, that's the benefit of oil stocks having a fairly high concentration on the Canadian market. But we don't have that rising bottom yet. So don't be surprised if we pull back and then try to build a rising bottom and head back toward those highs. The TSX chart is very similar to the Dow 30 chart. And again, it's because there's a little bit of extra weighting of those oil stocks in both. All right, well, let's move on to the small cap stocks in Canada, the micro caps, if you will, the TSX Venture. I don't show this chart every week. I did want to show it just to demonstrate that the micro cap stocks in Canada are still pretty dead, and it's not something I think we should be trading on. All right, now I want to take a look at the chart TBT, and I usually show this toward the end, but it was the real catalyst chart for the market rally. Because what happened on Thursday was the CPI number came out and inflation was lower than expected. It's still high, but what it implied is that the bond market has maybe priced in more interest rate raises than might actually happen. And so what we saw is the bond market went up, which means interest rates went down. And so when I look at this chart, TBT, it's the inverse of the treasury bond market. I know this is all a bit confusing, but basically, to keep it simple, if this chart goes down, it means interest rates have gone down. And you can see, obviously, interest rates have gone up a lot. They got overextended, and now they're breaking down from a falling top. Well, that's the exact opposite of the crash reversal pattern. This is a topping pattern. The interest rate chart has broken down from a falling top, which means interest rates should pull back in the real, trading of bonds. Now, if we go to the 3-year chart, you can see that interest rates went absolutely parabolic. And that means that we are due for a pullback. We are likely to come all the way back down to that line. We saw this with the energy market, maybe not quite a year ago, but many months ago. Energy went up too far and it pulled back to that upward trend line and it bounced. I think that's probably what's going to happen with interest rates. We're likely to see a pullback in the next few weeks as the market sort of digests the possibility that inflation is being reined in and that the US Fed and maybe other central banks won't have to raise rates so much. That's a positive for the stock market. I think it's going to be a rocky road, lots of volatility along the way, but things are certainly looking better. Well, if the interest rates go down, that usually causes the US dollar to go down because, of course, if you want to invest in US bonds and interest rates go down, then you're going to buy less of those bonds and the US dollar comes back. And you can see that's exactly what happened this week. Here's your daily upward trend line, falling tops. I started lowering my rating on the US dollar, I think last week or maybe the week prior, and now we've broken down. If you look at it on the 3-year weekly chart, you can see the parabolic trend has broken, and that means the US dollar probably going to come back to the linear trend, which would be maybe a few more weeks of downside. It hits that linear trend line and it should bounce higher. Well, what a weak US dollar does is helps commodities because commodities are generally priced in US dollars, so it makes it a little cheaper. So if we go to USO, which is oil, it had not a lot of strength, but it also is kind of insulated from the strong US dollar and it's relatively stable. But let's take a look at gold because that's where it really shows up. GLD had a strong week this week because the US dollar was weak. And you can see that the downward trend line in gold has been broken. There's not really a rising bottom there, so it's not a clear-cut signal. I think we may still get a little pullback. Let's take a look at that 3-year chart of gold. You can see a little more clearly, okay, we've made the break of the downward trend line, but we don't have the rising bottom yet. So maybe a pullback, build of a rising bottom, and then gold can go higher. All right, so that's how everything connects. We're getting some positive signs. I think there's some sectors of the market, the small caps, cannabis, biotech, some of the travel related areas are still strong. Those are areas to start to nibble on. And I think day trading and swing trading for the short-term traders, you can look for opportunities just about everywhere. So my ratings then, US stocks, long-term neutral, long-term neutral, short-term bullish. Same for Canadian stocks. Gold, I've raised it to neutral, long-term, bullish, short-term. Oil still bullish, long-term, but neutral, short-term. The US dollar, neutral, long-term. We did have that break of the upward trend, and bearish, short-term. Bitcoin is ugly, bearish on both time frames, and interest rates neutral on both time frames, as I think we could see a little bit of a pullback. All right, well, let's take a look now at the day trade of the week, and we saw day trading action pick up a little bit this week again, and of course swing trading as well. So if you're a more active trader, it's getting better. And this is a chart of a stock that many people like to trade, AMC. It's one of those meme stocks like GameStop and Bed Bath & Beyond, and it's been producing some trades lately. It has what I call a superhero setup here. I'll draw this in yellow so it's a little easier to see. So there's your rising bottoms and there's your flat top. That's called an ascending triangle pattern. And the stock broke out of the ascending triangle right there. See that little dot there? That is my action candle indicator. And so on a 1-minute chart, it gave us a buy signal right there around 12:20 or so. And it went for a nice run. So the economics of the trade are quite good. For every $100 of risk, you would buy 850 shares. That meant $5,584 of capital. You can margin that 3-to-1 when day trading if you want. So that's $1,870 of capital. By the end of the day, it had gone up 5.3 times risk. So that means for every $100 of risk, you had $530 gain, which was a 28% return for that relatively short half-a-day day trade. Well, hope that you've enjoyed this week's Market Minutes. Leave a comment. Do you think the market is bouncing? Do you see sectors of the market that I've missed that are maybe leading the way? Let me know in the comments. Click on the like button, subscribe to the channel, turn on the notifications bell. You know, all that stuff you're supposed to do. And most importantly, make sure you trade well.